Hi, welcome to episode 2 of Home In. I'm your host Ching, and with me, my co-host Justin. Hello, Justin.
Hi guys, welcome to Home In episode 2. We're excited to have you guys back. Thanks for tuning in.
Yes, so today, actually, we promise you that we will cover one very important aspect of owning a home, which is what are the hidden costs, right? Because we did get a lot of responses from you guys asking us, like, you want to know more about what are the costs involved. So that's what we're going to do that. But before that, I think I want to give a quick shout out to the sponsor for today's video, Coffee Ratio. Thank you for sponsoring our coffee. Love you. So
Much needed.
if you need a coffee fix, you can come to Coffee Ratio. Yeah. Okay, so how, Justin, come, maybe you can share with us, so what are the things that is in, what's one of the things that is in the hidden cost of owning a home?
Okay, so we covered like quite a bit in episode 1, right? We covered like what are the steps to actually own a home in Brunei. But as promised, we're gonna just give you guys a lot of value for this episode 2. So what we're gonna do is we're gonna cover the hidden costs,
Okay.
Which I believe some people don't really know about.
Okay.
So we're gonna dive into that
Yep.
today. So let's say if you are a fresh homeowner, right? Not to worry because hidden cost is actually part of buying any property, not just in Brunei, but also in other countries as well.
Okay.
So yeah.
Okay, so what are some of the hidden costs?
Okay, so just to give you guys a rough idea of the hidden cost, it's going to be about 14 to 15K. Okay, so this is actually not included in the price of the home.
Woohoo!
All right, so I'll just break it down to for you guys. So part 1 of the hidden cost is what we're going to call a sales and purchase agreement.
Okay.
So this will be coming from the lawyer.
Okay.
So whenever you buy. Whenever you're planning to own a home, right, of course you will go through loan approval. Okay, you're gonna get your loan approved first. Okay, we covered it in episode 1. So if you guys are not sure what we're talking about, you guys can refer back to episode 1. So let's say if your loan is approved already, step 2 would be going to the bank and doing an offer letter.
Okay.
Okay, once that is authorized, you will have to go to step 3.
Okay.
So step 3 is actually doing the bank's part, where they will instruct the lawyer to do searches.
Okay.
Okay, so as we covered in the
Yep.
first episode,
Yep,
it
I
will
think
be,
we mentioned that.
Yeah, so these searches, just a quick go through. It's bankruptcy search, landowner search, and also TCP search.
Can you remind me of TCP again?
TCP, okay, so TCP is town and country planning search.
Oh, yeah.
Yeah. So the area that you're planning to own, right, it has to be searched by our government to make sure that it is not in the plans of our government to take it back anytime, especially for like overhead bridge or highway purposes or any sort of like big projects.
Yeah, understood.
Yeah, okay, so let's say the searches are done already. That is step 3. So we're coming to step 4. We're going to dive deep into that today. Okay, so the first, this is step 4, so we call it the hidden cost. So the first one is the sales and purchase agreement, where you will actually have to be at the lawyer.
Okay.
Okay, the realtor will be there, the developer will be there, and also the lawyers will be there.
Okay.
They will bring in like a huge stack of documentations. Okay, they'll bring it in, walk in the door, and wham! Okay, so that is what you have to go through.
Okay.
Every single part of them, you have to authorize every single page.
Okay, understood.
Okay, it would probably take like 30 to 40 minutes of your time.
So that itself will cost money, is it? Like the sales and purchase agreement to sign that through the
Yes,
lawyer?
that's correct. So these fees, this sales and purchase, right, the fees actually have to be paid to the lawyers themselves.
Okay.
Okay, for them to draft these documentations.
Is it like included part in like the loan, or no, I have to pay out of my pocket?
Oh, there's a good question. Okay, so these hidden costs, right, it can actually be included in the loan for you.
Okay.
But there's a catch. The property that you're planning to buy, right, the market value has to be high enough.
Oh, okay, then it can be included.
Yes, that's right.
So is there like a threshold? Do you know, or is it case by case basis?
It's actually by a case by case. It depends on a lot of factors actually, especially I would say location.
Okay.
Let's take an example. If any of our homeowners, aspiring homeowners, are planning to look into Jerudong, because so everybody knows that Jerudong is quite in demand. KB, and there's Lumut. These are areas that are quite in demand.
Oh, Lumen also. Oh, okay. Oh, not
Okay,
bad. I stay there.
so market value for these areas tends to be higher than
Okay.
the rest of the areas. Like we covered, like we mentioned in our episode 1, Luma Pass is actually up and coming, but it's not as in demand compared to Jurong
Okay.
or Lumut.
Okay.
Yeah, these
Okay.
areas. Yeah.
Okay, so that will be number one of the hidden costs involved
Yeah,
to get the sales and purchase agreement signed.
Yes, I would say like the thing that affects the price of the SPA is also the cost of the property. Okay, not just the area. So a lot of things that you have to look into. So I would say I would always give my clients worst comes to worst. If let's say you want a worst comes to worst, I would say it's about 2,500.
Oh, to get the agreement done. Okay.
Yeah, correct. Because most of the homes that we market from our side, from our team, is 200 to 400K.
So the
it's around that range.
2005 is the. So that will cost roughly about 2,000 ish.
Yes,
Okay.
yes.
Okay.
We actually have like a list. If you guys would like a exact figure on, let's say like for example, if you're planning to buy a 200K home, what is going to be the price of your SPA?
Oh.
You guys can reach out to us anytime.
Okay.
Just myself or my team. So we will send you the list so that at least you have an idea, so that you are also like mentally and sort of emotionally
Monetary
prepared.
ready.
Yeah,
Okay.
correct. So that's the SPA.
Okay. Then what comes next?
Okay, so what comes next is, other than the SPA, is also the legal fees, or what we call the banking documentations.
Okay. Those cost money as well?
Those cost money as well. Actually, you'll be quite surprised. When I was first exposed to this site of hidden costs, I was quite surprised.
Yeah.
I didn't really know, like, oh my gosh, buying a home and owning a home really costs so much money.
Yeah.
It was quite a surprise to me.
I mean, who knows, right? Okay.
I mean, I was really quite surprised. So, but then I found out later that actually, if it's not just in Brunei but also in other countries, if you plan to own a property, there will always be startup costs involved or hidden costs.
Understood.
Yeah, these are more of the legal side.
Okay.
Okay, so back to the legal fees. So legal fees also depends on the price of the property. Let's say if you're looking into a 300K home, I would say that worst comes to worst, it will be about 4,000 to 4,500.
Oh, wow. Okay.
Yeah. We will actually provide you the quotation by then. So again, if you guys are curious, you can reach out to us anytime.
Yeah, I know all these are like case by case basis, right? It depends on the price, depends on who you go to. All this will change bit by bit. So, but I think that's a good general guide to know, like, oh, it's going to cost about 4K for the documentation and legal fees for the banking loan. Okay. Yeah, understood.
Okay, so that's the SPA, and there's also the legal fees or banking documentations. Okay, so let's say if you guys are wondering, hey, what is this SPA for? It's actually the terms and conditions, where we will actually include, like, okay, how many years of financing that you are planning to go for, and what is the size of the home, the size of the land, what is the area that you're planning to buy the home in. So all these things will be in the SPA itself. They will also include, like, what's the warranty.
Okay, so it's a very, very important document now.
Yeah, it is very important.
Yeah,
So all these things the lawyers will explain to you, because you have all the lawyer terms in there.
Yep.
So, yeah.
Understood. Okay, and after that, legal fees, banking documents, the next one is?
Okay, so aside from the SPA and also the legal fees, we also have the MRTA. So MRTA is very important.
Oh,
I'm pretty sure Ching knows this. Maybe Ching, you can enlighten us with.
I mean, maybe we'll listen to your side first, like what's the process and everything. Then I'm sure I have something to top up also, but I want to listen to, like, how to go through the process, because my side, I don't really go through the process, but I would deal with more the insurance bit only. Yeah.
Sure. So the third one is actually the MRTA.
Yep.
Okay, so whenever we take up home loan financing, MRTA is actually compulsory. There are some banks that are optional, but in most cases, we recommend our clients to take up MRTA.
Yeah.
Okay, so it's okay if the audience is wondering, like, what is MRTA for? Touch wood.
Yeah.
So touch wood, if anything happens to the client in terms of death, disabilities, or any sort of, like, accidents, the MRTA would cover all the outstanding payments of the home.
Yep. So maybe I'll give a quick explanation. So the MRTA is basically an insurance where It will cover certain events, like say for example death, right? Like Justin has mentioned, it will cancel the loan. So if I owe the bank, let's say 200,000 for this property, I pass away, then the insurance company will pay the bank that 200,000, so that my family don't have to sell the house, or they can still stay in the house. Basically, they don't need to pay for the house anymore because the insurance has already paid for it. Yeah, so that is the gist of what MRTA does. So very important because just now, like I was mentioning, right, what happens if I am the breadwinner of the family, right? So I earn, let's say, 4,000, and then 2,000 of it goes into paying for the home loan already, and then suddenly I pass away. So if my wife is a homeowner, a homemaker, which means that she's not working and taking care of the kids only, how can she find 2,000 every month to actually pay for this? So that's why the purpose of the MRTA is very important, because it will make sure that my wife don't need to sacrifice her time or look for a job to pay for this. And to look for a $2,000 job in this market is kind of tough also, right? So that's why we will do that. Now, in terms of the options of MRTA, it really depends on individual preferences. We do have people who just get MRTA, which is reducing term insurance. We'll go into, I think, not to get too technical, but basically as the year goes by, the insurance coverage will reduce because the loan amount that you owe to the bank reduces. Some people, they want other options. So you actually have an option as well, but provided the bank is willing to approve the case. But if they do, then you actually have to, you can use, like, maybe if you already have an existing insurance, you can assign it to the bank so that you don't need to get an insurance, provided your insurance coverage is big enough. So for example, if I have a life insurance of like 500,000 and I buy a home property that is worth 300K, this is more than, the 500,000 is more than 300K. But I can tell the bank, I said, I don't need to buy an MRTA because I already have an insurance. I will just assign it to you. That means that if anything happens to me, the money goes to the bank first to pay off any loans, and then the rest goes back to my family. So you can actually do that if the bank is willing to accept. So case by case basis.
I think there's a lot of options in the market, but I think in the end, I mean, for me, I would usually go for the cheapest one.
Well, some people, they want to see more than just the cheapest alternative. So some people, they say they want like cash value out of it, because paying for MRTA is also not cheap, right? So after all this payment, they want to have like, oh, can I get like refund, or can I get cash value or savings out of it? Because insurance, they see that as part of savings. You actually have that option to do so. But of course, when you go through that route, it will cost more because you're putting savings into the insurance also. So yeah, that's just part and parcel of it.
And I think what we can address is whether, the question is whether is the MRTA a monthly thing or is it a one-time thing? I think that's a question that we should definitely address as well. So MRTA is actually a one-time, whenever, as long as you take up home loan financing. MRTA is what we call mortgage reducing terms assurance. So it's definitely a compulsory thing that you have to take up whenever you go through home loan financing. But if let's say you're planning to, we do have some homeowners who are planning to buy homes by cash, but so you don't need to actually take up MRTA.
Oh, they buy cash?
Yeah.
Not bad.
So if let's say for cash buyers, right, if you're looking to buy a home via cash, you would actually, for the hidden cost, you would reduce a lot. You would just have to go for the SPA. Okay. So the rest of the hidden costs, you would not have to take note of that.
I think you will save up on the interest as well, right? Because you don't borrow money from the bank.
Yeah, definitely.
And then,
definitely.
Definitely. Okay.
So MRT, I think what we can also address is what influences the price of the MRTA.
Oh, yeah.
I think that's quite important. Okay. So this is definitely something that our audience should definitely know as well. So this is why we say that you don't want to rush into owning a home, but you also do not want to take your time as well. So part of the reason is because of this MRTA. Okay, so I would say there are three factors that influence MRTA.
Okay.
Firstly is age.
Yep.
Okay, let's say for example, if you are 24, okay, 24 to 28, or your early 20s or mid 20s or late 20s, it's a certain price. If let's say you get to 30 plus, it's a certain price again. Okay, if you're 40 plus, it's again another price. It goes with age.
Yep.
Yeah.
So the
okay.
older you get, the more expensive it will be.
That's correct. Okay, not just age, but also we have the current health condition that you're in. Let's say if I have high blood pressure, of course, the price of the MRTA would be affected.
Yeah, like if diabetes even more, it's gonna get more and more complicated, right?
That's correct. That's
Okay, I
correct.
want to ask you, Justin. What if this person is a cancer survivor? Can they buy MRTA? I mean, I know this is not your forte lah, but just want to know, have you encountered any case where people already have like a pre-existing condition? So high blood pressure is still quite common, right? Because people can be on medication, but like pre-existing, like say, cancer survivor, so they have been cleared of cancer for 2-3 years. Can they buy MRTA? Not
Not
too
that
sure.
I have any
Okay.
clients, but I think it should be all right. As
Okay.
long as you're cleared of any like health condition, it
Okay.
should be fine.
Okay. Yeah.
Yeah. I mean, we do have a few case studies now, so.
Yeah, I think in those cases, it will be case by case basis already. The insurance company may choose not to accept, or they might choose to increase the premium. So it will be even more expensive because insurance company are also businesses, right?
Yeah,
So
yeah,
they
yeah.
need to make sure that when they insure you, they don't incur a loss that fast. So then if they're willing to accept you, which you are more, we call it a non-standard case, then they might require more payment from you so that they're willing to accept the case.
Yeah.
Okay.
I think that's a good point out also because there are chances in which the MRTA will be rejected as well. So let's say if let's say if the health condition is too serious, then of course the MRTA will be rejected.
Yeah, I think maybe if the age is also too old,
Yeah.
then it will be a bit more complicated as well, right?
That's correct. That's
Yeah.
correct. Okay, so that's there's age, there's health conditions, but and thirdly there's also job factor.
Oh, high
Job
risk
factor
jobs.
plays a part as well. If you're like in a high risk job, for example, if you're a pilot.
Okay.
Okay, so if you're offshore, if you travel often by plane, so there's a certain kind of influence as well on the MRTA.
Okay.
Yeah,
Understood.
so I think something definitely our audience should know.
Yeah. Understood. Yeah. And after MRTA, what's next?
Okay, so we covered three, right? So SPA, we have legal fees, and then we have MRTA. Okay, so this is actually the last. Okay, this last one is actually very important. Okay, to your question, Ching, can I include the hidden costs into my loan?
Haha.
Right?
Okay. Yes.
That was what you asked in the beginning, right? Okay, so it is dependable on even though this fourth one you have to pay, it is really dependable.
Sorry. Wait a minute. So I have to pay as well. Okay.
Actually, no choice lah because you do have to pay this valuation report. So whether we can include the hidden cost into the loan or not is actually dependable on this fourth one. So this is actually what we call the valuation report.
Okay.
Okay, so what this valuation report is about is that the banks will actually appoint surveyors. The role of these surveyors, right, is to actually go to the place where you're planning to buy, okay, that particular location. They will actually have a checklist.
Okay.
For example, like, okay, house size checked, land size checked,
Okay.
okay, location checked,
Ah.
accessibility checked,
Okay.
how close it is to a number of amenities. Let's say if your home is close to Hoho or any kind of supermarket, okay, checked.
Okay.
So after going through all these, right, they will provide something which we call market value.
Okay.
Okay, market value is very, very important,
okay,
guys.
okay,
So for you to include your hidden costs into the loan is really, really dependable on the valuation report. Okay, as long as the market value is high enough, then you'll be able to include that into the loan.
But it doesn't affect my purchasing price, right? The valuation report.
That is a good question as well. I don't think we covered this in the first episode, so
Yeah,
we're
yeah.
going to dive in deep, really in depth. So, okay, that's a good question. Does it affect the property price? Yes, also as well.
Oh, really?
Yes, because what aspiring homeowners should know is that nowadays we will not be able to actually go take up full financing
Yeah.
from the bank.
Yep.
Let's say if you're looking into a home that costs you like 300K or 200K, the banks will not be able to lend us the full amount.
Okay.
It is because of this term in which we call LTV. So it's a LTV, loan to value.
Okay.
Which is set by BDCB as well.
Okay. Is
Okay.
it 80-20
Sorry?
or 90-10? the percentage?
For homes, it's actually 90. For
Oh.
most companies, it's 90.
Okay.
Semi-government companies and also government offices, government departments, it's 90%.
Okay, just to make it clear for the audience, I think I speak too fast also. The 90-10 means that you can borrow up to 90% of the amount. So for example, if you use the 300,000, 90% of that 300,000 is 270,000. Wow,
Correct.
that's not bad.
Correct.
Yeah. So 270,000, you can go to the bank and borrow that. So you need to come up with 30,000 on your own pocket lah.
Correct.
Yeah,
Correct.
yeah.
Correct.
So that is.
And if you add that if you add hidden costs in, it's going to cost you a lot of money.
So that, oh yeah, it depends. Can I add that into the?
Yeah.
Okay. Okay.
I mean, the overall cost, depending on the valuation report. Let's say if the valuation report doesn't go really well, let's say worst comes to worst, which we don't hope that happens. Like you mentioned, if a 300K home, you still need to come up. If let's say the market valuation is not enough for a 300K home, you need to come up with, like you said, 30K.
All right.
Right, as down payment.
Right.
Okay, 30K as down payment. Add hidden costs in,
Okay.
which is the SPA, the legal fees,
Okay.
the MRTA, and also the valuation report. It will cost you at least 40 to 50K easily.
So you, not another 40, 50, right? It's 30 becomes 40 to 50.
That's
not,
correct.
Not 30 plus 40, 50, right? Which is 90. No. Okay.
It's 30 plus the hidden cost, which is 50, roughly, worst comes to worst, 15K.
Okay.
So 45 to 50K.
Okay. Understood. Oh,
Which
wow.
people should also save up if you're planning to go for a home.
Okay.
Okay.
Understood. Yeah.
That is a worst comes to worst lah. So we're not actually like scaring people, but this is based on
It can happen. It can potentially happen.
the real scenarios
Yeah.
of owning a home in
Okay,
Brunei.
so what if the valuation report comes out favorable? Meaning,
Then
it-
good.
yeah.
Then
So
it's good.
so I buy the house for 300K, then but they value it at like 350. So that means I can borrow up to 350 minus 10%.
Correct.
Which
So it will be
okay.
LTV 90% of the market value, which is
350.
350.
Oh.
So from there, you'll be able, you don't need to worry about the heavy down payment. Okay, and you also don't need to worry about the hidden cost, which is 15K. We will just include, the banks, we just include that into the loan for you. So side of relief.
Okay. But you also pay more lah, right?
Sorry?
You also pay
Oh,
more
of
interest
course,
lah,
but,
right?
But
Because
if
you
you,
borrow.
let's say if you calculate, right, if the audience wants a monthly payment breakdown in terms of the house price compared to house price with startup costs, our team can work that out for you. So
okay.
if you're curious about the difference in terms of the monthly payment between
Okay.
house price and also the one house price with startup costs.
Okay. Oh, now at least I have a better idea on.
Yeah,
like,
but it's not much. It's not much actually.
Okay.
It's probably going to be like 50 to 100. Yeah, in terms of the monthly payment.
Okay.
Yeah,
Then
yeah.
that's not too bad.
Interesting, right?
Yeah, understood. Is there any other hidden costs that will be involved in that? Or that's pretty much the whole thing?
There's some more. So we covered 4, right? So that's the agenda of our episode today. So SPA, legal fees, MRTA, and also valuation report. Okay, so another thing that our audience should know is that when the house is completed,
All right.
okay, when the house is completed,
Yep.
what are the costs that you can expect? It's not as much as startup costs. So let's say if your home is already completed, it's ready to move in, okay? It's in the phase that's ready to move in. We have to take into account of another insurance, which is
Fire insurance.
Fire insurance.
And then also fire and content.
Correct.
Right.
Okay. Which is to, of course, obviously protect the home against fire.
Yeah. In case the house burned down, you can claim insurance too.
Yes.
Yeah.
That's a yearly thing. Let's say for a home that costs you like 300K, it's about 250 to 300 per year.
Yeah. You can get quotation from insurance agencies, general insurance companies. They're more than happy to quote you, depending on like how much you declare is your value of your home, and then how much is the contents as well.
Okay.
Yeah.
So other than the fire insurance, of course, there's the most homes in Brunei, developers don't actually include. It depends. Some developers do include it. Some developers don't. But I would say like majority of the homes in Brunei, the water meter.
Oh, okay.
And
that one costs money,
Yes.
to get water meter installed.
Yes.
Oh, wow. Okay.
Water meter and also electric meter. Okay.
Oh, okay.
So this part, the payment has to be made to JKR.
Government.
Yeah, during your occupation permit phase before you move in. So the payment has to be made. Then installation, then your OP is set to be approved.
Okay.
Okay,
Yeah,
so these are the two.
fair enough. Yeah.
These are the two, yeah. So yeah, that covers pretty much it. The startup cost, which is 15K, and when your home is completed, you have the fire insurance, which is 250 to 300 per year. Then you have the water meter, electric meter, that's about 2002 to 2003.
To install.
The range, yeah.
Okay. All right. Fair
Okay.
enough. Yeah. Anything else that we should take note of?
Yeah, that's pretty much all the cost that is involved in the home owning process.
Okay.
Yeah.
I think thank you very much for sharing. I think we are running out of time. But I think I want to take this opportunity to thank Justin as per episode 1 also. These are all the information that I would have never found out on my own or can't be bothered to find out until I actually go through the whole process. So this is actually giving me a good head start on I need to be aware of all this.
Yeah.
So at least I'm more mentally prepared.
Coming here, I was super excited as well. On top of that, the coffee from Rachel. Yeah, I mean, looking forward to more. Coming here, I was super excited to be doing this podcast with you. Thank you again, Ching. Yeah, a lot of responses from our first episode. We were so surprised.
Thank you.
I wasn't expecting any.
It's okay, we're heading in the right direction.
Yeah. Yeah, so I do hope, Ching and I do hope that this podcast has been of value to you guys. If there's anything that you want clarification on, especially like the in-depth, what's the SPA, okay, legal fees, MRTA, valuation report, you can always reach out to myself and my team or Ching regarding the fire insurance and MRTA. Yeah, so that's why we're here. We're here to not only provide value, but we're also here to help our fellow Bruneians.
Yeah. So I think, if you want us to cover anything that we have not discussed, we're more than happy to actually just let us know in the comments. And then make sure to follow, like, and subscribe us to Justin as well, and to myself as well. You want to buy insurance, can look for me. Yeah, I think next episode, I want to ask you to cover something very interesting, which is should I buy landed properties?
Okay.
Should I buy proposed? Should I buy already something that's pre-built, right?
I think that would be a very interesting.
That is what I personally am interested in.
Yeah, I think that would be.
So if you are into this also, please make sure just subscribe to us, and then we'll talk to you very, very soon.
Okay.
Yeah. Thank you for your time.
Thank you, guys.
See you. Bye-bye.
Bye-bye.